Okay, good afternoon, everyone, and welcome to our weekly highlights. And today, myself, Louila, will be bringing you through to understand what is happening in the market and where are the good stock picks to trade for today. At least we are not, we're not really that bearish as compared to what happened last week on Wall Street. Today we did tank slightly in the middle of 9:30, and then it went to 10:30 and still in the range of negative 0.7%. And later stage it rebounded towards near towards the -2 to -3 points down. So right now it is -2.91, 0.21%. So what is happening in the market is definitely the talks on Federal Reserve being more hawkish, and that would contribute to higher potential interest rate hike environment with the inflation and also high interest rate high environment that would be also causing the recession fear. Okay, so people are talking about this, and let's see how does it pan out. But certainly in the US is not looking that great because the indices, most of the indices are in the negative territory, which is below the S&P 200. Similar to our FBM KLCI, we are also in that range, below the S&P 200. But good thing is that we have the budget ahead, but we also have the election fear that would be also causing some sell down in the Malaysian market. I wouldn't see a lot of trading activities until they call the election, because once they call the election, people are fearful. People might sell off some of the shares, being cautious, and that may see further downside risks towards our stock market. But for now, I still take that two events, budget 2023 and also the GE15, as a good sign, because they should trade slightly stable ahead of these two events. And for budget 2023, definitely people will be chasing those potential beneficiary. So later on, we'll be talking about some of them, but we wouldn't review a lot of them today. And because next week we have a holiday on 10 of 10 October, and we will be doing the webinar on the 11th of October, but it will be replaced by market outlook topic. Okay, so also after the budget, what is the additional things that we can add on to fourth quarter? Because right now I already issued our report on market outlook, but we have to still go through budget 2023, and from that point we will know what is happening in the market and what other information that budget 2023 has given us, and what should we be putting inside our fourth quarter to deal with it. Okay, so so looking at the FBM KLCI right now, it has stabilized, sort of stabilized and rebounded towards the first session closing. So that is a good sign. And most of the stocks, you can see that technology being hit the most is still in a negative trend, negative tone. So if you look into this, consumer has been recovering quite well. So construction has been recovering as well a little bit, but not much. Property still down, plantation still down, REIT still down. I think REITs is very clear cut that it is not be able to rebound higher, because if the interest rate hike is continuing higher, and also the yield, bond yield is also going higher, it doesn't make sense for people to buy into REITs. Okay, so that is just a relationship between the REITs and also the bond yield. Okay, government bond yield. Government bond yield has actually spiked today as well. So that is why people might be buying government bond instead of, buying the REITs for returns, big X amount of returns, because REITs are considered as equities, and equities are considered as risky asset, and bond, in other hand, is sort of a safe and secured kind of returns. If you're buying at this yield rate, you are definitely going to get this kind of yield at the end of the maturity. So if you are looking at that kind of point of view, perhaps people may choose government bond rather than REITs, which is slightly risky. Okay, so I would say that consumer is definitely good to look at. So construction maybe we have to monitor what's happening later stage, second half, and property no, plantation no, for now. But bear in mind there are still some of the good counters that can be traded throughout time, despite the whole market is down. Okay. So other than that, let's check what is the greatest suffer. Okay, um, energy stocks. Energy stocks is being at a negative trend, so it's not that decent. And what else? We have this is the strongest decliner. The second is healthcare. Healthcare, I'm still quite skeptical about the healthcare stocks downtrend move, because I think most of the downtrend has been priced in, and very likely I'm going to monitor for a rebound for these two companies, Hata and Kosan. So that's why we have put these two counters into our stock picks. So at a glance, we really are out of ideas, as in the market is out of ideas of where should they park their money into. Even financial services, the beneficiary of interest rate hike upcycle, is still also down a little bit. Plantation is still down. Telco is still down. Even the utilities players are still down as well. So overall, market is quite um, mixed and confused about the situation right now. But if I can make a clear mind to trade in the fourth quarter, definitely I'll be using budget 2023, potential beneficiary under budget, and potential rally ahead of GE 15, and also potential window dressing activities to hit us by end of December. That may help us to contribute to our portfolio positioning. Okay, so so fret not. I think we should be able to go through a very decent fourth quarter. Despite this, all these challenges, we are still likely to end up well. Okay, so let's share with you my stock picks, our stock picks for today. We have put in quite a few. One is Tropicana, one is Tenko under the property counters. Although we are saying that property index is down, but I can see the uptrend position in Tropicana is still decent, and volume has been picking up. So therefore, we have put in this into our daily picks. We hope that the individual counter may outperform the index itself and to search higher. So this is definitely looking like a triangle formation here, breakout. Okay, triangle formation breakout. So the um, earlier position might be the first wave, then second wave here, and then third wave here. Okay, so that would be around 1 ring and 33 cents. But if you're taking the breakout and the base for extrapolation purposes, then you can get this range of 126, 127. So there are two range that I'm monitoring as the target. One is 126, 127, another one 132, 133. And our cut loss is definitely below the 1 ring and 15 cents level. Okay, so if you're trading on this counter, you might want to wait for the breakout pullback formation here, and then if there is a good rebound, perhaps then you can actually look for upside potential. Currently, if it is not pulling back, it should be performing a sideways formation, and hopefully that it can break out, from this 2 or 3 day sideways consolidation phase. Then next target will be around 126, 127, 132, 133 level. Okay, so another counter under the property sector is Tenko. Tenko has made a breakout move today, and so this could be a good opportunity to look at it. 30.5 cents is the breakout, 31 cents currently trading at. 28.5 is the cut loss point, and our initial target earlier on is 335 and 36. Okay, 335 and 36. So these are the two levels that you can actually monitor for near-term upside move. Okay, so before I go into the rest of the stocks, I think you all need to share the video out and also click a like button in order to get a sharer badge. Once you get a sharer badge, you can put in your stocks uh, into the comment. Then I'll review by the end of the session. Okay, so in order for us to review your stocks, you need to at least share the video out to get a sharer badge. Okay. So what else did we put in? We put in two companies under the solar related. One is St. Maiden, one is SciPark. Although SciPark has negative thoughts from the market because of the weaker earnings, and this is not really pushing the stocks higher. But again, we are seeing the upward tone being set quite uh, multiple times. Okay, multiple times. One, two, and three. So basically, we have one low, two low, and three low. Given that these lows are higher lows, this is telling us that the uptrend move is could be sustainable, and this has retested three times. And again, if we look into this range here, it is sort of forming a symmetrical triangle formation. So it needs some time to form the 1, 2, 3, 4, 5 before the breakout happens above this trend line. But if you are trading around this level here, yeah, basing on yesterday's earnings or last Friday's earnings, you have to be cautious when it comes back to around 38, 39 cents level, because that is the level where people are trying to sell off the shares, but it did not. Okay, so which means that people are still um, deciding whether this is going up north or down south. But based on the current potential, it seems to be that this could be turning upwards, but we need to see a good crossing above the trend line or the recent resistance around 46 cents. Then it should give us some good potential for some good moves towards 51 cents level. Okay, so this is SciPark. The other one is Sam Maiden. We think Sam Maiden is still quite decent, and uptrend move is there, and it is currently making also some sort of pennant formation or a small triangle formation. So it needs to clear off this trend line before it surge higher. But I'm already seeing some signs that potentially we are anticipating a breakout to happen above the 76.5, and the cut loss point is at 72 cents, 71, 72 cents. And if you look into previous resistance, there is a very strong volume here. It needs to clear off, and there is a lot of volume here as well. So the resistance will be along this level here, 81 cents. And if you look back into this period of time, this is also quite significant because a lot of people have sold around 81 cents. And this could be a rounding bottom. If you check this correctly, this is definitely around and also around. And if it is coming back towards this level here, we might be looking for the cup and handle formation. Or this can be also a very long stretch of a double bottom formation, although the bottom has, it's not really a very clear double bottom, but instead it is sort of uh, a rounding shape. Okay, rounding shape. If there is a pullback and then a breakout, that would be a great opportunity to look above 81 cents level. So right now, it seems like there is already a sign where this is likely to break out. So we just have to monitor for near-term wise. What is the outlook? Basically, if you take a longer-term view, this is likely to be, let me check. Okay. If you notice this trend line here, or this channel here, the channel has been always retesting this line, but later stage it tries to deviate from the line and deviate further from the line, and it has surged above this trend line and moved into a breakout and pullback and continuation pattern. So given this scenario, we might be looking at this range as the first wave, pullback wave, and then The third wave should be from here and to here. Okay, so 114 might be the next range of target for a very long-term perspective. But definitely right now it's the start of the trend because we are seeing some of the good potential moves from the results, first of all. Secondly, is that it is also trading ahead of the budget 2023 event. So definitely this could be some beneficiary under this budget 2023, and hopefully that it could surge it into a higher position. Okay. Next, we have Resintec. Resintec has been seeing some good breakout pullback and continuation pattern move, but just that the continuation pattern is very short-lived. So we have to monitor for 50.5 cents. If it is breaking below this level, then you have to cut loss. If it is hovering above the 53 cents, we might see further target towards 57 or even 61.5. So this is related to plastic related industry, and we hope that the plastic resin prices, the resin prices is coming down in tandem with the crude oil prices. Hopefully that would also boost their margins going forward. So these are some of the levels that you have to monitor. Okay, red tone, it's quite positive. Okay, why do I say positive is that after a long stretch of downward trending tone, the moving average, the price is below the moving average, and also the other moving average such as 5 and 20 is still below the SMA 200 earlier on. Right now it has turned more positive, which means that it is fanning upwards on most of the moving average, similar to what happened in the past. Okay, so early on, most of the moving average is below the SMA 200 until one day it surpassed this level here, and then all the way it went up. Okay, so this is what we are looking for in red tone. Okay, so basically this is some of the opportunities that we are seeing right now in red tone. And red tone itself is related to the telco sector, and telco sector has been all this while waiting for the 5G rollout to happen, and also the DNB signing of this DNB with the stakeholders and also the shareholders, such as all the telco companies. But since May and also April, May, June, they have extended the deadline, and until right now, I think it's still not in the news yet that they have signed, and they have how is the structured being how is this structure being structured right now. So we are still waiting for that 5G rollout thing. But if 5G rollout is still in the dark, and it's not coming out yet, we hope that the budget 2023 will be able to give us some clue on those things. Okay, so that is what we are waiting for. And quite likely telco is always a beneficiary under budget 2023. So hopefully that red tone can actually trade higher ahead of the event. And if you look into the breakout, pullback, and continuation pattern, 455 is the breakout. It has pullback without significant volume. So we are going to monitor that. Once it is able to pull back towards 455 and rebound with some good volumes, that is when I think the share price should start trading higher. Okay, so long term wise, if you check against this level here, so it's sort of like heat resistance here, and then breakout, pullback, and continuation pattern. So hopefully that this is able to continue from this point onward. At least it is not breaking below the lows, and it's not falling like that. So if it is going up slightly above the trend line, it is considered as a breakout already. And most of the moving average is above the SMA 200. So that is a good sign that the follow-through interest should be seen at least for the near 1 week to 3 months term. Okay, so the rest is medical sector, Kosan and Hata. I think Kosan and Hata is all good because I think during I think 2 weeks back, Mark Ma has actually been mentioning that the ASP for gloves is actually stabilizing, and likely to bottom within the next 6 to 9 months. So which means there's a very good chance that at least in October onwards or next year onwards, the ASP should grow gradually, maybe by 1 to 5% or 10%. Then hopefully that it should sustain and support the share price of most of the glove companies going forward. I believe that under these top four companies, Hata, Supermax, Top Glove, and Kosan, people like Kosan and also Top Glove more than Hata and Kosan as compared to Top Glove and Supermax. I think basically perception issues. Um, and also Top Glove has always been mass production glove product producers. Unlike Hata, they are also mass producing gloves, but their margins are higher because they are in a good nitrile gloves game, and their R&D has done well to save at least some costs in producing gloves, and that savings is always contributing. It's always good to contribute to the earnings. So Hata is one of the best for now because it is still trading at a near or higher to the NTA value, but the rest is lower than the NTA value. So basically, we like the Hata because people would pay premium for this company. Okay. So Kosan is the next. Kosan is also having a breakout move this morning here. It has breakout above 1 ring at 5 cents. Today it back to 105 lowest and hovering around the 106 level. So overall, I'm still anticipating further upside for uh, the Kosan. Kosan next target will be around 115 and support is located around 98 cents level. So yeah, so overall I think there is a very good chance that we can anticipate glove company to have already bottomed near this range. Okay, so besides all this, before I go into traders list, if you want to ask about your stock picks, you can also put inside the comment section and we'll take it from there, but provided you have the sharer badge on top of your comments. Okay, yep. So, other than that, what else do we have? We have APB. We have put in last week. We have put in Kenhin as well. We have also put in CCK and Microlon and also Pertama. Okay, Microlon, I think it is quite decent. You can actually start to monitor for upward potential from this point because all this while it is below the SMA 200, but right now the moving average is slowly creeping above the SMA 200 zone, and that's where we can anticipate further upside for a stock. Okay, and Pratama, it's also triggered. Okay, triggered. And Pratama is all this while uptrend in tech position. So after the pullback phase, they are also going up higher. After they have also put out results, it's also going to it has went up even stronger. So overall, I think Pratama is also in the good rallying tone towards perhaps the 160, 170 zone, and support is located around the 140. Okay, so yep, hold on a second. So 170, 172, that is the target for Pratama. And I think MYG need not say much. Everyone knows about them. I think MYG has been all this while a favorite counter to trade, at least for the budget and also for the GE15. So for MYG itself, we have seen after the earnings a gap, not really gap up, but a breakout, and also continuation pattern above the 81 cents. The 81 cents was the breakout, pullback, and continuation pattern. It holds around the lowest point around 80.5 cents here, and it rebounded to form a hammer pattern, and the rebound extended for the time being. So we believe that it might continue to trade higher towards 905, or 92 cents level. So that is just the outlook for MYEG. Okay. So, given all these sectors and also stock picks has been done today for the daily picks. Next week we'll go in more detail on our market outlook, why, and what are the picks that we are having for this quarter. And if you want to have a view on the report, it is on our website. You can just go through our M Plus online website to get a feel of what are the stocks that we have selected and why did we select the stocks, and all is written in the report. Okay, so this will come to an end, but before we end this session, we'll also take some questions. Okay, around 3 to 4 minutes to take some questions. I only have one questions for the time being, but if you want to put in more into the comment section and share the um, the video out, you may get your stocks being reviewed. So I've seen SFP Tech, MYG, and Akmo. These are the three companies that are being given to me with a share badge on top. Okay, so SFP Tech is coming as becoming a pullback formation. But this pullback formation, I think there is still one more leg upwards. Okay, so I'm still believing that uptrend is still intact. Higher high and higher lows should be seen. So if you are interested into taking part in this company, you might want to look at 159, or you can drill down to slightly smaller time frame, which is 30 minutes. And 30 minutes, surprisingly, is holding around 162, which is near towards the SMA 200 zone. And this is telling you that there is some bullish divergence signal coming in. Potentially, this will be the lowest point at this particular point of time. And hopefully that tomorrow itself, it should, or this week itself, it should hold around, holds around the 159 level, and hope for rebound to happen in the near term. So if there's a good rebound from that point, then perhaps we only can see further upside. But for now, I think it might continue to consolidate at least for the near term around the 159 level. Okay, but definitely it's quite interesting in terms of the uptrend position, and all the IPO related counters has been turning into a positive tone recently. So my EG, I need not talk much because just now I've mentioned. The other one is Akmo, one of the subsidiaries under MYEG. And if you look into Akmo, it doesn't look that great. Okay, first of all, it has actually broken out above this range of resistance. So to 81.5, the current position is 85.5. So there could be some further selling activities to be seen, and hopefully that it should hovers around this level before we do sort of a rebound play and upward trend towards the previous high around the 94, or even towards the 1 ringgit zone. So that is just my view on the newly listed Akmo. Okay, so if you look into this Akmo itself, we can also notice that it is lower high, but it is almost the same or slightly lower low. But as of this juncture, I think the signal on RSI might be ahead, slightly ahead, that it is going into the negative region for now. Sorry, it is going to the oversold region for now. And if there is a good rebound move going forward, then perhaps that is a good sign for us to re-enter on Akmo. So Akmo itself, it is currently undergoing the consolidation phase. 80 cents is a cut loss. 85.5 is the near-term resistance, or another range that you can actually monitor is the SMA 220 level, which is near towards the 89 cents level. So once it is above that level with some good volumes, which I think it should be turning out soon, then we should be able to see further upside towards the 93.5 and also 95.5. Okay, So basically, those are the stocks being asked by the crowd today. Yeah, it's already 1 p.m. And just to reiterate what has what I have conveyed today is that most of the negatives are still there, like the Federal Reserve being hawkish, the all this inflationary pressure may cause the recession fear is still there. The Russian and Ukraine tension is still there. So basically, broader market are negative, but under the broader market, a bright spot that we can actually notice in Malaysian market is the basically the better GDP, first of all, in Malaysia. Secondly, is the budget 2023. And thirdly, is the around the corner GE15. So these are some of the ideas revolving around these three events. And hopefully that consumer sector quite resilient should be able to go through this, weather through this fourth quarter, very tough situation in fourth quarter. So that is just the some of the ideas or some of the broader outlook for now. So do remember that next week, October 10, it's a holiday, and we will replace the webinar on Tuesday, which is 11th of October, and that will be our market outlook. Okay, so our market outlook fourth quarter will be on the 12th. Sorry, will be on 11 October, 12:30 p.m. noon. Okay, so thank you so much for your time today, and we will see you again next week. Thank you and bye bye.